The Federal Reserve is breaking the U.S. housing market, and here's why. Welcome back to the Industry Leader Update. The Fed will push until something breaks. Now, that's been a popular line among economists and analysts, according to a recent column in Fortune. And that something is likely to be the U.S. housing market. Since the Federal Reserve began hiking interest rates at an unprecedented pace, mortgage purchase applications have fallen by 38%. But wait, don't we have a housing shortage or a lack of inventory that's going to prop up today's high home values? Not necessarily. So what is pushing home values down despite a lack of inventory? In 2 words, it's demand destruction. The average U.S. 30-year mortgage rate has more than doubled since the beginning of this year, reaching 7.16% last week. And those with less than stellar credit may be paying closer to 8%. Some economists expect that the average borrower may be paying 9 to 10% on a 30-year mortgage by the end of the first quarter of 2023. Now, these rates have effectively squashed homebuyer demand, with more potential buyers deciding to sit on the sidelines until either home values or interest rates fall significantly. However, there is also a reduced demand for commodities, consumer goods, and homes that will eventually be bringing lower prices. Yes, it's surprising. In an inflationary market, it's hard for us to imagine that we're going to see deflation, but that's the natural result when the Fed reverses course and begins to enact quantitative tightening, what they're doing now, shrinking their balance sheet and their holdings of mortgage-backed securities, and also pulling money out of the U.S. economy. Despite numerous economic indicators that we've seen for the last 6 months, the fallout from the Fed's repeated interest rate hikes has caught many by surprise. But in the end, the real-life impact is going to be lower median home sale prices, which in turn reduces home values in a given market. Markets such as Boise, Idaho, and Reno, Nevada, they've already seen their median sales price drop by 8% in just 4 short months. The median sales price in Austin, Texas plummeted by 14% from May to August, with the price falling from $720,000 to $620,000. Older homeowners in these markets are unlikely to pull up stakes, they usually don't, and move. Thus, they're going to be riding out what appears to be another housing recession. And those who seek to get a reverse mortgage, they're going to see their potential loan proceeds squeezed by higher interest rates and lower home prices, and both of those obviously are going to reduce their principal limit. That is the percentage of their home's appraised value that's eligible for the loan. Now, despite this, tens of thousands of seasoned homeowners still could qualify and benefit from a reverse mortgage. Now, the Federal Reserve has weighed the risk of unchecked inflation, which is very dangerous, versus a recession, and they found a recession is a more preferable and pragmatic approach. Bill McBride, the author of the economics blog Calculated Risk, told Fortune this summer, the most frequent way that we enter into a recession is that the Fed raises interest rates to fight inflation. The leading indicator of this type of recession is housing. Now, in conclusion, I expect that the Fed is going to continue to hammer away at inflation, even with more rate hikes, including a potential 75 basis point hike when the Fed meets this Tuesday and Wednesday. After all, it's their last weapon to surging consumer costs. Now, in the meantime, loan originators may want to research the markets in which they originate to determine which are less vulnerable to significant home price drops. Now, what are your thoughts? Leave your comments in the comment section below. And also, if you'd be so kind as to share this week's video on your LinkedIn, Facebook, and other social media profiles. And don't forget our YouTube channel. You can subscribe, and please hit the like button if you appreciate the work that we put into this and every episode. Every week, also, you can listen to the reverse mortgage industry's most relevant and current news on HECM World Weekly. By the way, we're the nation's only weekly podcast for reverse mortgage professionals like yourself. Thanks again for joining us. Until we return next week, happy originating.